Hey everyone, in this video I'm going to highlight 6 growth stocks you could buy now in September and hold for the long term. Remember, this video is going to be short, and so if you want deeper analysis on any one of these 6 stocks, please feel free to dig through my channel. I've got more videos on all of these 6 stocks. So let's get right into it, starting with the first 3, the Walt Disney Company, Salesforce, and Alphabet. Now, these 3 stocks are not trading expensively despite being growth stocks. The most expensive is Salesforce at a forward PE of 23.82, Alphabet at a forward PE of just 20.72, and the Walt Disney Company trading at a forward PE of 16.97. Now, looking at their revenue growth, you can see that the company with the highest revenue growth is also the one that's the most expensive, and that's just a coincidence, and that's not always the case. Salesforce, with its most recent quarter, grew revenue 11.28%, Alphabet at 7.06%, and Disney at 3.84%. Disney's growth will be slower over the next few quarters and perhaps the next 2 years as it transitions from being primarily in its content business, from primarily being cable delivered to being delivered through streaming subscriptions. And that transition is weighing down its growth. Longer term, I can reasonably expect Disney's revenue growth to approach closer to double digits when it settles into that transition and that accelerates down the line. Profitability is another important metric I consider, and Alphabet at a operating profit margin of 25.75% demonstrates how lucrative its advertising business model is. Salesforce has been increasing its operating profit margin 9.2% most recently, and the same is true for the Walt Disney Company as it has reopened its theme parks. That part of its business is extremely profitable and it's fueling profit margins for the business overall. Overall, the company's operating profit margin is 8.49%, but if you just look at the theme park segment, that's approaching over 35%. And so what's weighing on the company is that transition I talked about earlier. But thankfully, management has said that the streaming business will be profitable in fiscal 2024. So just 1 year from now, by the end of that year, its streaming business should be profitable. And so investors can expect margins to turn around from there and start rising as the company reaches scale large enough to make profits from that side of the business. All right, the second batch of stocks include Nvidia Corporation, New Holdings, which you may not heard of, and PayPal. So Nvidia, of course, benefiting from the surging demand in artificial intelligence. New Holdings is a financial services company based out of Latin America. Interestingly enough, it's kind of compared to PayPal, the PayPal of Latin America, I've heard some people call it. And then finally, PayPal, which is trading at a relatively cheap valuation. So let's talk about valuation. Nvidia trading at a forward price to earnings of 31, but considering its phenomenal growth prospects, I think this is a bargain price to pay for Nvidia stock. Then you have New Holdings trading at a forward PE of 23.3, and finally PayPal at a forward price to earnings of 11.2. Now, looking at revenue growth for these 3, Nvidia, like I mentioned, is absolutely experiencing a surge in demand, 101% revenue growth in its most recent quarter year over year. New Holdings, similarly explosive, 98.5% revenue growth year over year. PayPal is the pedestrian of the bunch, coming in at revenue growth of just 7.07%. But remember, you're getting PayPal stock at a half the price of New and nearly 1/3 the price of Nvidia. So the appeal of PayPal is that it's a growth stock, but trading like a value stock, trading like a cheap stock. So that's the appeal of PayPal here. Looking at operating profitability, Nvidia's operating profit margin jumped to 33% in its most recent quarter, and I wouldn't be surprised if this continues higher as the company is generating gross profit margins above 70% for its GPUs and its processors that help accelerate large language models and other types of artificial intelligence. PayPal, a solid operating profit margin of 16.68 is nothing to complain about. And again, remember, you're getting PayPal stock at a bargain valuation. So these statistics, these metrics are solid for a company trading at a forward price to earnings of just 11.2. So there you have it, 6 growth stocks that I think you can buy in September and hold for the long term. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.